I remember the very first time I walked into a financial advisor's office, and a couple things came to mind. One, they had a really fancy conference room. Two, the advisor that I was talking to was wearing a really nice suit. And three, everything that he said, I had no idea what he was talking about. And I remember he got to the end of his little spiel and he said, "Do you have any questions?" And it made me think, like, I should probably have questions, but the reality was I didn't know what questions to ask. Hey everyone, I'm Jacob Turner, former Major League Baseball player and current co-founder of Moment Private Wealth. In today's video, I'm going to be walking through 10 questions that I would recommend that you ask to any financial advisor that you interview. So here's the biggest problem. 99% of financial advisors all say the same thing, but they all do something different. In fact, I would argue that the term financial advisor might be one of the broadest terms out there. So here's 10 questions that I think will help you narrow down who and potentially why you might want to work with one. The first question is, what do you specialize in? In 2024, it is paramount that when you go to try to find somebody to help give you financial advice, that you find somebody that's an expert in your situation. Let's compare it to if we were going to a doctor. If you had an arm injury, you would say, I would go to my regular doctor and he would prescribe me to go see maybe an orthopedic surgeon. And then an orthopedic surgeon would say, you know what, because you broke this specific part of your arm, we would recommend that you go work with this specific specialist. You want your choice of financial advisor to be just as specialized. The second question is, what areas of your life are you actually going to get covered? And this is really important to think about because the days of a pure investment manager, in my opinion, are over. You want to make sure that if you're hiring a financial advisor, if you're making that investment into that relationship, that you're getting more than just investment advice. So oftentimes, some of the most common things that I see are making sure you're planning around how income's coming in, making sure that you're getting advice on tax planning. So what can I potentially do to lower my lifetime tax bill? Things like estate planning, making sure that my assets are protected and that they're giving direction. Risk management, which is a fancy term for insurance. And then also the investment portion, something that's really important, but it's also important to understand what are the other areas that this individual might be helping me with. The third question is, what can I expect in a typical year? How many times are we going to meet? What kind of value are you going to be driving for me? So I'll give you a couple examples. I've talked to advisors that say, I've met with my client maybe once, maybe I haven't met with them at all. The reality is you want to make sure that if you're investing in this relationship, that they're investing in it too. So as an example, at Moment Private Wealth, we typically meet with our clients twice a year. And it's very intentional. We meet with them right around tax season at the beginning of the year, and then we meet with them right before the end of the year. Because our goal is we want to make sure that we're covering the big things when those big tax moments come up in their lives. And then throughout the course of the year, we're doing other things to make sure that we're staying on top of everything else that's going on in their financial life. The fourth question is one of my personal favorites. Do you invest the same way that you tell your clients to invest? Everybody's investment portfolio is going to be unique. And I'm not saying that everybody should have the same one. But what I am saying is that I have seen time and time again, financial advisors recommend products and solutions that they would never buy themselves. I know that because it happened to me. I remember asking my advisor what he invested in, and it was something vastly different than what I was investing in. I think it's really important to understand that if an advisor is going to be recommending a certain way to invest, that they're also putting their money where their mouth is and that they're investing in a very similar fashion. The fifth question is, what are the costs involved with this? I want you to think about it like this. There's direct costs and there's indirect costs. So out of those two costs, the direct costs are things that are easy to see. Those might be a percentage of assets to your advisor. They might be a flat fee, whatever the advisor charges for his services. The indirect costs, those are a lot harder to see. And there's really three big ones for you to think about. The first one's expense ratio. So this is the cost of the funds that you're actually investing in. And some of these can vary widely. You typically don't see this, but it just comes out of your total return. So you want to make sure that you're understanding of what are the expense ratios I'm investing with. The second area is kickbacks. Oftentimes, some advisory firms will pay advisors in certain ways to recommend certain products or solutions. You want to make sure that whoever you're working with is getting no kickbacks based on what products or solutions they're recommending. And the third area is what I call home field advantage or hometown bias. Where they say, we think our funds or our solutions are the best, but oftentimes what that really means is they might be getting paid more money by recommending their own funds over what might actually be best for you in your situation. So it's really important to understand the two types of fees that are out there. There's the direct cost and there's the indirect cost. And those combined add up to your total cost. The sixth question is, what is your advisor to client ratio? One of the biggest areas that I see that is an issue in the industry is that advisors take on too many clients. And the reality is there's only so much bandwidth to be able to serve those clients. If you look at the industry as a whole, there's plenty of advisory firms out there that have hundreds and hundreds of clients per advisor. I think it's really challenging when you think about how many working days there are in a year, for an advisor to have that many clients and really be able to do quality work. So I think it's important for anybody that's looking at potentially hiring an advisor to know, what does an advisor to client ratio look like, so they can have a better understanding of what is the service model actually going to provide me, and how much time and focus and energy are you going to have on my specific situation. The seventh question is, who is your custodian? So a custodian is just a fancy term for, where do you hold my money at? So we've all seen those stories about somebody investing with an advisor and they say, I opened my account one day and all the money was gone. Now the reality is, in order for that to be true, they really need to be holding the money themselves and not at a third-party custodian. So at Moment Private Wealth, we hold the money, we hold the client's assets at Fidelity. This provides an additional level of protection because we always want to make sure that they're at a third party. That means that everything that we're doing has to be signed off by the client. There's no way for us to be able to go in and take those funds and move them to another account, which is really, really important when you're working with an advisor. You want to make sure there's checks and balances in the process. The eighth question that I would ask is, what does your average client look like? And look, I think this one's really important. So we already talked about the fact that we want to have specialized advice. I want to share some news. High net worth clients is not a specialization, but what is a specialization is something like athletes and entrepreneurs. And then on top of that, saying, outside of those athletes and entrepreneurs, what does your typical client look like in that range? So for us, our average net worth of client is north of $5 million. And that means that the products, the solutions, the things that we're thinking about are really meant for a high net worth to ultra high net worth demographic. And you want to make sure that any advisor that you hire works in whatever demographic you're in, because you want specialized advice that's meant for you. The ninth area, and one of the areas that I always felt like when I sat on the other side of the table as a client was really important, was, how do you work with the other members of my team? So a financial advisor is one piece of the entire financial team, but they're not everything. Typically that looks like a CPA needs to be on the team, maybe an insurance agent, maybe an estate planning attorney, maybe an attorney inside your business. You want to make sure that whatever you're doing, whoever you're working with to quarterback that team, how do they communicate with that group of people? I think team coordination is one of the biggest and often overlooked areas in the relationship with a financial advisor. And the reason for it's kind of simple. If you think about every single one of those aspects, they all really tie into each other. And the reality is, if those individuals aren't talking to each other, the only person that's not benefiting from that is you. And you want to make sure that if you're investing in an advisory relationship, you want to make sure that they have everybody on your team looped in on every strategy, everything that you're thinking about, and ultimately provides better outcomes for you. And then the last question is one that I think really sheds light on what's important to the advisor. Just simply asking him, why you? There's a million advisors out there. What would be the advantage of me choosing to work with your firm? The reason why I love this question so much is because it will help shed light on what's important to them. If they immediately turn to investment returns, that's one of the biggest priorities they have in the relationship. If they immediately start talking about tax planning or team coordination, that that's a huge aspect of it. If they go back to the specialization that they have and some of the results they've derived for clients in that specialization, that might be a big focus for them. But really what it does is it allows you to be able to see, as the potential client of the firm, to say, okay, this is what really matters to them, and this is what they feel like really helps separate them. Trusting someone with your money is hard. Knowing what questions to ask is even harder. Use these 10 questions the next time you're in a meeting and you're discussing potentially working with an advisor. I know for me, when I was in that situation, I didn't know what questions to ask. And I think these 10 are a great starting point.